So there is two things I want to share with you guys here in this very short video. We're going to keep this video like 5 to 8 minutes long, hopefully shorter the better. But this is kind of a time sensitive video, so you guys definitely want to watch this by the end of the week, but really by today, because we have a major catalyst coming tomorrow, and I want to go over different scenarios with you guys. If XYZ happens, well, this is what's going to happen in the market, so on and so forth. And we also do have some very bad news coming out from Voyager Digital that is so bad for the crypto markets, I can't even really put it into words. So we're gonna get into both of these key things. Hit the like button, subscribe to the channel. You guys know the spiel already. Get your free stock with Webull, Moomoo, and Public. Also, if you guys want to trade with me live in real time, link down below in the description of this video. It will never be cheaper. You know, inflation is high and there's so much value provided over there. Make sure to check it out if you guys have not already. Give it a trial run if you guys want to already. We will be or if you guys have been thinking about it, we will be raising prices here shortly, so you will lock in your rate for the rest of your God-given life. So check that out if you guys want to. But nonetheless, let's dive into the two things that I want to talk about here in this video, and that is the first one, which is just bad overall. This part is not really time sensitive, but the next thing will be. So it says crypto platform Voyager Digital shares plunged 60% after revealing $665 million exposure to embattled hedge fund, considers issuing default notice. It says crypto platform Voyager Digital shares plunged more than 60% Wednesday after the company said its subsidiary Voyager Digital LLC may issue a notice of default to embattled crypto hedge fund Three Arrows Capital for failure to repay its loan. Voyager's exposure to Three Arrows includes 15,250 Bitcoin, or about $315 million based on the crypto's recent price, and $350 million worth of the stablecoin USDC, the lender said in a statement Wednesday. Bitcoin is trading at around $20,629 Wednesday, down 4.6% over the past 24 hours, according to CoinDesk data. The debtor has yet to repay any of the debt after the lender initially requested a payment of 25 million USDC by June 24th, and later of the entire balance of USDC and Bitcoin by June 27th, according to Voyager. And that's obviously not going to happen. Voyager said it is in discussions with Three Arrows advisors for legal remedies available. So that's a bad situation. To see a exchange, a subsidiary, right, pretty much Voyager Capital, like $665 million, like that's more than the whole market cap of Voyager Digital, and that is a very bad situation. Defaults at all are bad, but especially in crypto, in a market that is unsupervised, that we have no idea what is going on under the surface, that is just an overall shit show that people are slowly going to not want to be a part of. It's not like buying a stock where earnings are audited and you know the information being provided to you is, you know, beyond a reasonable doubt like true, right? You have no idea what's going on under the surface with crypto. We had no idea Voyager Digital had a $665 million exposure to the worst crypto hedge fund that you could possibly imagine they would have exposure to, right? So that is not good for crypto. It will likely help to weigh on the markets as a negative factor. Now, the real thing that I do want to talk about here in this video is going to be the Fed bank stress test results, and I think that's why the markets are coming down towards the last couple of minutes of trading here today. If we pull up the 1-minute candlestick chart, you guys can see we pretty much ripped throughout the day. We were up almost 1% on the S&P at one point, hitting 378.71 for the high of the day, and we have slowly been falling into the close. Now, today was pretty bullish because the Fed was honest, and they did say that there is a possibility of a recession here in the next couple of quarters. And I think that's overall bullish because the markets already expect there to be a recession. It's pretty much getting priced in, and like I said, I do think most people at this point think a recession is a possibility. So that was a little bit more clarity from the Fed, and we do get the Fed tomorrow as well, so there will be more updates as far as the Fed is concerned. But the bank stress test, if you guys are unaware, it's essentially a made-up scenario where the stock market falls like 50%, unemployment rate goes to like 15%, and there's like a 20% default rate. Something absolutely out of a horror movie if you're in the realm of finance. It's like your worst case scenario, and it's basically making sure that banks have enough liquidity to still lend out money, that they're not going to go bankrupt, they're not over leveraged, they're not in too many risky assets. And typically what has happened over the last 2 years, where liquidity has been cheap, there has been cheap money, just everyone was in a good place, right? When stocks and houses and everything else is going up in value, when you can buy a used car and that motherfucker goes up in value and you can sell it for more than what you bought it for after driving it, like, that's expected to, you know, be good for banks. Like, you wouldn't expect banks to be in a bad overall liquidity situation then. But what has happened now, it's not the same, right? Lending has really slowed down in a big way. Interest rates are now more expensive. I'm sure you're seeing default rates going up quite sharply, I would imagine, over the last couple of months, especially on revolving lines of credit, where people just, you know, seen their payments balloon essentially on them, and that has been bad. So if the bank stress test results are bad and banks fail, especially the larger banks, like if you have a Goldman Sachs, JP Morgan, Bank of America that fails their stress test, that could possibly give you a 3 to 5% down day on Friday, because that's the difference between a recession and a possible depression. Now, if I'll give the banks the benefit of the doubt, I'm sure they've had a long time to see this coming, and I'm sure they'll be just fine. I'm sure they'll do fine on their stress test. And if they do, that's going to be a 2 to 3% positive day coming on Friday. So you're either going to end out the week Friday on a very strong note or a very bad note. But if I were to make a judgment call here, and I were to just you know, give a prediction, I don't necessarily want to give a prediction, but I know people are going to say, hey, you brought me to this video and you're not going to tell me what you think. I do think it's probably going to be a positive reaction, but I'm not so convinced that we couldn't see a negative reaction and that we couldn't see banks in a bad situation. Like Credit Suisse, they're more European, they're in a really bad situation, but American banks have been in a pretty good situation over the last 2 years. So I hope that it didn't switch that quickly in 6 months. This will be the first stress test of 2022, so we'll see how it goes, and it's going to be a very, very important event. If all things are good, then you could see a substantial rally in the overall stock market. So that is going to be all for this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Make sure to get your free stock with Webull, Moomoo, and Public. And like I said, if you guys want to trade with me live in real time, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.